Morning everyone. Today we will start with the topic wealth maximization. Wealth maximization is the concept of increasing the value of business in order to increase the value of the share held by its stockholders. The concept requires a company management team to continually search for the highest possible return on fund invested in the business while mitigating any associated risk or loss. This calls for a detailed analysis of the cash flow associated with each prospective investment as well as constant attention towards strategic direction of the organization. Wealth maximization is the appropriate objective of an enterprise. Financial theory asserts that wealth maximization is a single substitute for stockholder utility. When the firm maximizes the stockholder wealth, the individual stockholder can use this wealth to maximize his individual utility. It means that by maximizing stockholder wealth in the firm in operating consistently towards maximization stockholders' utility. So, the most direct evidence of wealth maximization is changes in the price of a company's share. For example, if a company spends funds to develop valuable new intellectual property, the investment community is likely to recognize the future positive cash flow associated with this new property by bidding up with price of the company's shares. Similar reaction may occur if a business report continue increasing in a cash flow or profit. The concept of wealth maximization has been criticized since it tends to drive a company to take action that are not always in the best interest of its stakeholders such as suppliers, employees and local communities. So, many investors are subscribing shares of a company, so they are continuously focusing on the company's profit. So, if company shares value will be increased, automatically the wealth of the investors are also increased, because many issues related to senior managers may find it necessary to back away from the sole pursuit of wealth maximization and instead of their issues. Effective financial decision making requires an understanding the goal of the firm. What objective should guide business decision making? That is, what should management try to achieve for the owners of the firm? The most likely widely accepted objective of the firm is maximize the value of the firm for its owner, that is maximize shareholders' wealth. Shareholders' wealth is represented by the market price of firm's common stock. Warren Buffett, that is CEO of Berkshire Hathaway, outspoken advocate of the share wealth maximizing objective and a premier value investor. Our long-term economic goal is to maximize average annual rate of gain in intrinsic business value as per share basis. Now, why maximizing shareholder wealth is a better goal? The shareholder wealth maximization goal states that the management should seek to maximize the present value of the expected future return to its owner of the firm. This return can take the form of periodic dividend payments or proceeds from the sale of the common stock. Present value is defined as the value today for some future payment or stream of the payments. So, evaluated at an appropriate discount rate, the discount takes into an account the return that are available from alternative investment opportunity. Higher the stock prices per share, the greater will be the stockholder wealth. Thus, a firm should aim at maximizing its current stock price. This objective has been the increasing value of share market. The share market price serves as a performance index or report card index in progress. It also indicates how well management is doing on behalf of the shareholders. So, it can be concluded by maximum utility of maximum shareholders wealth. It also increases maximum stock price per share, because a shareholder maximization goal, or you can say maximize the wealth, it's a main objective. It can be measured by market value, defined as the price at which the stock trade in the market price, such as on the New York Stock Exchange. Total shareholder wealth equals to the number of shares outstanding by the market price of the share. The objective of shareholder wealth maximization has number of distinct advantages. First, this objective explicitly considers the timing and risk of the benefit expected to be received from stock ownership. Similarly, manager must consider the elements of timing and risk as they make important financial decisions, such as capital expenditure. Second, it's conceptually possible to determine whether a financial decision is consistent with this objective. If the decision is made for effective increasing the market price of the stock, it is a good decision. It is also, you can say, one more objective, that is free to sell their shares under more favorable terms than are available under any other strategy and invest their funds elsewhere. If an investor has a consumption pattern or risk preference that is not accommodated by the investment financing and dividend decision of the firm, the investor will be able to sell his or her share in the firm at the best price and purchase share in the company that are more closely to meet the relationship of the wealth maximizing behavior. The stakeholder, that is customer, employees, supplier and the communities which operate on the basis of various sustainability or investment for this stockholder. It is you can say it is calculated by the it is also form of the social responsibility. The wealth maximization is also one type of increase in the main two objectives are there, that is generally wealth maximization and profit maximization. In profit maximization, the term profit denotes, that is maximum profit to be earned by an organization in a given period of time. The profit maximization goal implies that the investment, financing and dividend decision of the enterprise should be oriented to profit maximization. Profit maximization is the best criteria for decision making. It is best criteria for efficient allocation of resources and optimum utilization of resources. In the same manner, wealth maximization is the objective of financial management to increase the market value of the firm's share, maximize the present value of the course, that is action of the shareholders, accounts for the timing and risk of expected benefits. Benefits are measured in terms of cash flows. So, wealth maximization objective is consider the shareholders' interest, lenders or creditors' interest, then workers or employees' interests. Is also ensures fair return to the shareholders, building up reserve for growth and expansion, ensuring financial discipline in the management. It also focuses on long-term increasing the wealth of the shareholders. It also account time value of money. It considers the risk. It maintains market price of the share. It also recognizes the value of regular dividend payment. So, major implication of wealth maximization is the maximizing policy in financial management, and also serves as one of the management and society. Besides shareholders, there are short-term and long-term suppliers of funds who have financial interest in the concern. Short-term lenders are primarily interested in liquidity positions so that they get payments in the time. So, profit maximization is the main objective to earn a large profit. In the same manner, wealth maximization have a highest market value of common stock. In profit maximization is emphasis short term, but wealth maximization is emphasis on long term. Profit maximization ignores the time value of money, but wealth maximization considers the time value of money. Profit maximization also ignores risk and uncertainty, but wealth maximization recognizes risk and uncertainty. In profit maximization ignores timing of return, but in wealth maximization recognizes the timing of return. So, advantages: it serves as the interest of owner, equity shareholders as well as other shareholders. The objective of wealth maximization implies long-run survival and growth of the firm. take into consideration the risk value, time value of money, the current present value of any particular course of action is measured. It also effect of dividend policy and the market price of the shares. Now, disadvantages of the